Hi there, this is Michael Kramer of Ma Capital. Today is Tuesday, March 11th, and it's around 4:10 p.m. New York time. So tomorrow we're going to be getting the CPI report. We're expecting to see core CPI rise by 0.3%, down from 0.4. Core CPI year over year expected to come in at 3.2%, down from 3.3. Headline CPI expected to rise by 0.3%, down from 0.5. And CPI year over year expected to rise by 2.9%, down from 3%. We'll also be getting a 10-year auction at 1 o'clock, and that will be followed by initial jobless claims on Thursday and producer price index also on Thursday morning. We're looking for a 3.3% increase year over year, down from 3.5, and we'll be looking for a 0.3% increase month over month, down from 0.4. And then, of course, on Friday, we'll be getting University of Michigan consumer sentiment for the month of March. We're also going to be paying very close attention to these preliminary inflation expectations. Both were up sharply in the month of February. Monday, we'll be getting retail sales, so there'll be no retail sales this week, but next week we will be getting it. If we turn over to the technical charts, we'll start off with the euro today. The euro's obviously had a very big move for fundamental reasons. We went over some of those reasons last week. Clearly, we're hitting a very important level for resistance right here around 109.5. This was a high that we saw back on November 5th. And then, of course, on the 6th, we got the election results and the euro plunged. So basically, we've returned and we've gotten back all of the losses the euro saw following the U.S. election. It is worth pointing out that the euro is getting overbought here from a technical perspective as well. RSI is well up over 70, almost 76. We're trading above the upper Bollinger Band now for a few days in a row. So, if there's any place where you would expect the euro to pause and potentially pull back some, this seems like a legitimate spot to expect at least a sideways period of consolidation or a potential pullback towards this 107.80 region. I think ultimately, though, the euro is probably going to end up breaking out above this 109.5 area and probably head towards this 112 region. I think fundamentally they've shifted in that direction enough that I think the euro strength is probably likely to continue overall, but it, again, probably doesn't happen in a straight line. When we look at the pound, we're also seeing similar sorts of movements. We saw the pound clearly break through resistance at 128. It looks like now we're heading towards another level of resistance around this 130 area. And if we can clear this 130 area, there's really not much keeping the pound from potentially rising perhaps all the way back to this 132 region. Again, like the euro, the pound is also getting to be overbought, although I would think there's probably a little bit more room to rise for the pound, at least over the very short term. But again, I think you're kind of looking for an area of some sort of pullback or consolidation here before the next leg higher probably starts for the pound. When we look at the Japanese yen, also very similar. The Japanese yen clearly broke through this support region around 149. Now we're kind of sitting at the lower Bollinger Band and got an RSI that's basically got down to around 30, but not quite. So when we look at this, it looks again like there's maybe some support that's forming right here around 146. A break of 146 clearly sets up a return to 143. I don't think the yen is strengthened quite to the degree that you've seen out of the euro or the pound. So I think it's quite possible that the yen may actually continue to strengthen a little bit in the days to come. But overall, I think this general trend that we're seeing in the FX markets are probably telling us that the move and the weakness in the dollar is probably not over yet. When we look at copper, it looks like it's getting ready to potentially break out and move higher. It's certainly not overbought by any way. In fact, we came down to the 20-day moving average, and that's where we bounced off of. RSI well below 70, well below this upper Bollinger Band. When we also look at and consider, you have this potential double bottom pattern that's formed. You have this triangle pattern that's formed, and we've clearly broken out. And there is clearly also an uptrend that appears to have formed as well, which could actually be creating a ascending triangle here, which would suggest that we break out and we move up And if we do move up, and again, I would be probably thinking we go over $5, maybe towards 5.10 or so in the coming days if we were to get a breakout here. Again, when we switch over to oil, we've been watching this $66 to $65 region. Still hasn't broken yet, and it's been trying to break this area now for a really long period of time. And every time we get there, that seems to be where we bounce. It's happened now on a number of occasions going back for a really long period of time. So again, I still think that until oil really breaks this region, I think you have to be patient and wait, because if you get too bearish and oil doesn't break 65, then it's going to probably go back this way, and it could potentially even break this downtrend again and really move higher. So I think you have to be really careful with getting too negative on oil until it really gives you a reason to. And I don't think there's a reason to be too negative on oil yet, because we can't break support. When we look at the DAX, we're starting to see a little bit of a pullback here just because the equity markets here in the U.S. are getting rocky. There is clearly a support level right here at 22,250. I mean, if this level breaks, the next area I would be looking for comes around this 21,500 spot. Again, you can see the lower Bollinger Band somewhere around 21,960. Totally possible that we trade even below it. RSI is certainly not suggesting we're oversold at all. So there's plenty of room here for the DAX to really materially start breaking down if it can get through support at 22,330. Because I would tend to think that, with U.S. equity markets moving down at some point, it's going to catch up to the rest of the world. When we look at the FTSE, that's obviously been doing really poorly the last couple of days. What's interesting is that we're now seeing it really diverge from copper prices, and we haven't really seen that happen in a extremely long time. So it's going to be really interesting to see how this sort of resolves itself. Just because you can go back and you can see historically there's a very tight relationship between the two, and it isn't often that you get copper prices going up and the FTSE really going down in a meaningful way. So this is an interesting divergence, and one that we need to think about and consider. I mean, clearly, if we see the FTSE break through this support area at 84.70, then we're talking about potentially coming back down below 83.90. But the one thing I'll point out is we are trading below the lower Bollinger Band, but the RSI tells us we could still potentially see lower prices. Momentum isn't quite there yet. And so right now, I think we just have to wait and see how this kind of acts at 84.70, regardless of what copper does, right? I mean, if we break this level, then I think you have to kind of ignore copper until you start seeing the FTSE start turning around. But again, there's a really strong relationship there, so I think you want to try to be patient and see how this resolves itself at this 84.70 level. A gap lower could easily put you on a path to where we started at the origin here at 8,200. So there's a lot of risk, I think, to the downside, but I think you have to just kind of wait and see how this resolves. So the NASDAQ obviously has been getting hit pretty hard the last couple of, since really the middle of February, and the selling pressure has really only intensified. We are looking at a scenario here with the NASDAQ where we are oversold with an RSI of 28, and we are at the lower Bollinger Band. We also have broken some meaningful levels of support that go all the way back to the June of 24. You can see that this level was important here. It kind of created this little bit of an island top. When we came back down, here you can see it was important. In this region, it was important, this region. And we basically just gapped right below it, and we just kept moving lower. So I would think that 19,900 probably serves as resistance, and I think support probably lives somewhere. And if we do continue to keep dropping without any form of a bounce or consolidation, I would be looking for a move back to this 18,400 area. That seems to be the most likely spot that you're going to find some support. It doesn't really look like there's very much anywhere else along this chart. But again, given that we are a little bit oversold, I think you have to be careful of an upside risk. Also, it's very similar with the S&P. The S&P clearly also an oversold condition around 28. Also, the S&P trading with an RSI of 28, below the lower Bollinger Band. We closed below some pretty important support today at around 5,600. And that really also opens the door to much lower prices, potentially 5,400. And again, like the NASDAQ, this was an important level of support and resistance too on a couple of different occasions. And so the fact that we just kind of sliced right through it is certainly not a welcome sign. And even today, you can see we tried to get back above it, and that served as resistance. And my gut is that that's probably going to serve as resistance now, and we could be heading towards 5,400. And with the Dow also, you can see, I mean, it's pretty easy, I guess. You can clearly see we've taken out some major areas here that, kind of suggests that the Dow has also lost some meaningful support. You can also make an argument that there's been a double top pattern that's formed. I mean, you can make that for the NASDAQ too, which would suggest, maybe a move down to the 38,000 level, which would really take us back to also some important regions of support in this from a prior period going really back to early 2024. So there's a lot of risk here for the Dow, and the fact that it already broke kind of gives us a sense that this may serve as resistance. Again, the next major area of support would look like it comes around 40,600. But like everything else, the Dow is getting pretty oversold as well. So I think there's a risk that you could see a significant bounce. But, again, these markets don't look great when you look at them from a technical standpoint. And when you look at the dollar weakening and the risk for commodity prices to break out to the upside, it creates sort of like this stagflation feel for the U.S. And that probably isn't going to do well for stock prices, just because if you think about the potential impacts to corporate earnings. So anyway, I hope you have a great rest of your week, and we'll see you next. Bye.